Joined on the line by Miles Daly. He's the CEO of RCL Foods to discuss the company's full year numbers. Miles, thank you so much for making the time to join us. Just by looking at your results, you had a headline loss, but yet again you had a lot of corporate activity that took place during the financial year.
Yes, good morning. Certainly it's been a transformational year for the business, and I think if you look at the highlights of what's changed, we acquired 100% of TSB for a 4 billion rand consideration. We restructured our BEE deals and implemented new ones. We raised another 790 million rand through a minority pro rata share issue. And importantly, we redeemed the Food Corp euro-denominated bond that was of the order of 350 million euros. And we acquired the balance of the Food Corp shares that we didn't own. So as you say, certainly a significant amount of corporate transactions this year.
Miles, we are joined here in studio by Martin Strauss. He's one of our market commentators. I want to bring him into the conversation. What caught your eye with regards to these results? Miles is on the line.
Hi, Miles. Martin Strauss, PSG Wealth. Thank you for speaking to us. I see you guys have had quite a busy trading period with your acquisitions in Food Corp and TSB Sugar. I just wanted to come to that loss. I see you guys at a 1.04 billion rand finance charge or cost of acquisitions as a result of those of the companies that you bought into. Was it a strategic decision by management to maybe write that off once off through the income statement and not to capitalize?
Certainly, what happened is we redeemed the Food Corp bond, 350 million euro that was outstanding. Originally, when we bought Food Corp, it was 390 million. We were able to pay some away. The balance we could only pay away in terms of the indenture agreements in April this year. When we paid it away, there were foreign exchange losses that we had to bring to book. So before it would have been a mark-to-market, but on the basis that we actually paid it away, we crystallized those losses. So you'll see in our announcement there's a 561 million rand fair value adjustment as a result of Food Corp's euro debt, which is why we put the pro forma in place to try and give a perspective on what it would have been if we hadn't done that. I think from a positive point of view, we no longer have a euro-denominated debt. We've replaced that with rand-denominated debt.
Miles, let's just talk about the fact that you are consumer facing. We've been talking a lot about the consumer being under pressure at the moment, but also you've been faced with the poultry industry has had imports that have been coming through. You've also been looking at the cost of feed. How has this translated in your results?
Certainly, Rainbow and the chicken industry has been under a lot of pressure over the last few years, and there are really three key aspects that impact the industry, one of which is Rainbow specific. The first is that imports are still at very high levels during the course of this year. So although we've made progress in government and DTI have acknowledged dumping and they've put measures in place, we haven't seen the benefit of that yet in this financial year. We've had still high feed raw material costs, of the order of about 10% increase in feed. But what is encouraging is that we're seeing global stocks and local stocks of maize in particular being very healthy, and therefore we think we'll see a benefit of that flowing through in this financial year. And the third issue is the injection cap, and that's an area where Rainbow differs from the industry. We've limited capping of our injection at a level that we're comfortable with and a level that we think is a benefit to the consumer, whereas other parts of the industry may inject somewhat higher. Therefore, we've been very supportive of government's announcement that they're going to cap injection. Again, this hasn't come into effect yet, so we haven't felt any benefits of that. All we're really looking for is a level playing field, both in terms of injection and in terms of imports.
Level playing field. I'm going to be bringing Martin into the conversation again. Martin?
Miles, just one more question. I see you guys at the acquisition of SenFood Logistics in Botswana. It's their largest cold chain distributor. I just wanted to know the strategy going forward. Do you guys expect a larger portion of your operating profits to be generated from the African market?
Certainly, our ambition is to build an African food business of scale. But as you'll appreciate, Africa is a big continent with lots of opportunity, but one needs to tread carefully. So we are looking at making smaller acquisitions or joint ventures where we can add value in areas that we understand. So the recent acquisition joint venture in Zambia with Zam Beef, so we created Zam Chick. That's a 50-50 joint venture with them. That's working very well. The CN Foods is more recent, but again, we're very comfortable that that will be a platform for us to grow Vector's route to market in Africa.
Miles, thank you so much for making the time to join us and giving us an update, or rather helping us drill down on those numbers. That was Miles Daly. He's the CEO of RCL Foods.